Hello, students. Hope you all are doing good. Today we will start Unit 10th Life Insurance Meaning, Need, Functions, and Development of Life Insurance in India. Overview of the session: define life insurance, essentials of life insurance, a scientific concept, features of life insurance, development of life insurance in India. Definition of life insurance. A contract of life insurance is that in which one party agrees to pay a given sum on the happening of a particular event contingent upon the duration of human life in consideration of the immediate payment of a smaller sum or certain equivalent periodical payments by another. This definition was given by Bunyan. Life insurance contract may be defined whereby the insurer, in consideration of a premium paid either in lump sum or in periodical installments, undertakes to pay an annuity of a certain sum of money either on the death of the insured or on the expiry of a certain number of years. Definition was given by Iris Sharma. Life insurance business is the business of effecting contract upon human life. Definition given by Insurance Act. An untimely and premature death of the bread earner brings economic disasters to the dependent family. Essentials of life insurance. An insurance contract will essentially specify sum assured, the amount payable when the specified event occurs. Second, term, the period during which the event must occur for the sum assured to become payable. Third, premium, the amount payable by the insured as consideration to the insurer. Fourth, mode of payment or premium. It could be monthly, quarterly, half yearly, or annually. It may be direct payment by the individual or a deduction from salary by the employer. Fifth, premium paying period. Being the duration for which the premium is payable, this may be the same or less than the term. Sixth, participation in profits. Whether the policy will participate or not participate in the surplus generated by the insurer. Participating policies are called with profit policies, and non participating policies are called without profit policies. Life insurance, a scientific concept. There are several reasons for life insurance being considered a scientific concept. First, risk sharing. Life insurance means pulling off funds of people and meeting the loss of those few who have met a mishap, that is, an early death. After the death of the breadwinner of a family, the members of the family may be compelled to live a life of misery, but for the insurance cover that comes to their rescue by providing money for sustenance, education, and growth. Second, the law of large numbers. The principle of risk sharing works only when the law of large numbers is operational. Under this scientific principle, the larger the group, the lesser impact the death of one member on the group as a whole. A group with just 100 or 1,000 members would not work. The base would be too fragile, too susceptible to mortality due to situations and events that lead to unexpected mass death, such as an epidemic or an earthquake that would take away thousands of lives in a certain geographic location. This is one reason why groups and individuals today transfer the risk to insurance companies, in effect forming groups consisting of hundred or thousand, very often millions of members. Hence, larger groups make insurance successful. Predictable mortality. The third principle of Insurance is the predictable nature of mortality. It is not possible to tell when a person will die, but as more than one century has passed for the insurers recording data about health, lifestyle, and mortality trends, insurers can project life expectancies. This data is recorded in mortality tables. A mortality table summarizes the lifespan of a large number of people. Investments. It may be years before a claim is made against the policy premiums collected, minus the claim paid during the year, and the other expenses of insurance company are invested. Also, a percentage of asset is set aside as company reserves to meet the claims as they arise. Fair and accurate risk selection. A life insurance contract is an aleatory contract. It is based on the possibility of a chance occurrence, and in all likelihood, one side will benefit more than the other. Fair and accurate risk assessment should be done, especially with individual insurance policies. Coverage is issued based on the assumption of reasonable risk. This means insurance of healthy people who are generally in good health should be done. This is made possible through a medical examination at time of issue of policy. Features of life insurance: instrument of savings, provide social security. Risk coverage starts from the date of accepting the proposal. Beneficiary, nominee, legal, there stands to gain. Policy can be assigned or mortgaged. Policyholders can seek loans against the policy. Certain policy cover up for treatment so serious ailments. Ministry of Finance extends income tax benefits on the amount of premium paid. Money can be set aside for children's marriage and education. Provisions for old age. Development of life insurance in India. The story of insurance is probably as old as the story of mankind. The same instinct that prompts modern businessmen today to secure themselves against loss and disaster existed in primitive men also. They too sought to avoid the evil consequences of fire and flood and loss of life, and were willing to make some sort of sacrifice in order to achieve security. Though the concept of insurance is largely a development of the recent past, particularly after the industrial era, past few centuries, yet its beginnings date back almost 6,000 years. Life insurance in its modern form came to India from England in the year 1818. Oriental Life Insurance Company, started by Europeans in Calcutta, was the first life insurance company on Indian soil. All the insurance companies established during that period were brought up with the purpose of looking after the needs of European community, and Indian natives were not being insured by these companies. However, later, with the efforts of eminent people like Mutilal Seal, the foreign life insurance companies started insuring Indian lives. But Indian lives were being treated as substandard lives, and heavy extra premium was being charged on them. Bombay Mutual Life Insurance Society here had the birth of first Indian insurance company in the year 1870 and covered Indian lives at normal rates. Development of life insurance continue. Starting as Indian enterprise with highly patriotic motives, insurance companies came into existence to carry the message of insurance and social security through insurance to various sectors of society. Bharat Insurance Company 1896 was also one of such companies inspired by nationalism. The Swadeshi movement of 1905 to 1907 gave rise to more insurance companies. The United India in Madras, National Indian and National Insurance in Calcutta, and the Cooperative Assurance at Lahore were established in 1906. In 1907, the Hindustan Cooperative Insurance Company took its birth. In one of the rooms of the Jorasanko house of the great poet Rabindranath Tagore in Calcutta. The Indian Mercantile General Assurance and Swadeshi Life were some of the companies established during the same period. Prior to 1912, India had no legislation to regulate insurance business. In the year 1912, the Life Insurance Companies Act and the Provident Fund Act were passed. The Life Insurance Company Act 1912 made it necessary that the premium rate tables and periodical valuations of companies should be certified by an actuary. But the act discriminated between foreign and Indian companies on many accounts, putting the Indian companies at a disadvantage. The first 2 decades of the 20th century saw a lot of growth in insurance business from 44 companies with total business in force as 22.44 crore. It rose to 176 companies with total business in force of as rupees 298 crores in 1938. During the mushrooming of insurance companies, many financially unsound concerns were also plotted, which failed miserably. The Insurance Act 1938 was the first legislation governing not only life insurance but also non life insurance to provide strict state control over insurance business. The demand for nationalization of life insurance industry was made repeatedly in the past, but it gathered momentum in 1944 when a bill to amend the Life Insurance Act 1938 was introduced in the Legislative Assembly. However, it was much later on the 19th of January 1956 that life insurance in India was nationalized. About 154 Indian insurance companies, 16 non Indian companies, and 75 provident were operating in India at the time of nationalization. Nationalization was accomplished in 2 stages. Initially, the management of the companies was taken over by means of an ordinance, and later the ownership to by means of a comprehensive bill. The Parliament of India passed the Life Insurance Corporation Act on the 19th of June 1956, and the Life Insurance Corporation of India was created on 31st September 1956 with the objective of spreading life insurance much more widely and in particular to the rural areas with a view to reach all insurable persons in the country, providing them adequate financial cover at a reasonable cost. Life Insurance Corporation continues to be the dominant life insurer even in the liberalized scenario of Indian insurance and is moving fast on a new growth trajectory surpassing its own past records. Life Insurance Corporation has issued over 1 crore policies during the current year. It has crossed the milestone of issuing 101,32955 new policies by 15th October 2005, posting a healthy growth rate of 16.67% over the corresponding period of the previous year. From then to now, Life Insurance Corporation has crossed many milestones and has set unprecedented performance records in various aspects of life insurance business. The same motives which inspired our forefathers to bring insurance into existence in this country inspire us at Life Insurance Corporation to take this message of protection to light the lamps of security in as many homes as possible and to help the people in providing security to their families. Thank you.